Let's talk about agro commodities now, where the sugar prices rebounded from their lowest level in more than 7 months on bargain buying, driven by hopes that the demand for the sweetener will improve in the summer season. Though the rising supplies have capped too much of an upside, but even then 1% of a strong gain coming in for sugar today. In pulses, the chana futures declined due to fresh supplies from the new season crop amid weak domestic demand, while the expectations of a rise in output also weighed onto the sentiments of further declines there. The cumin seed futures rebounded from a fresh contract low hit today on some value buying, which outweighed expectations of a rise in output and the new season supplies as well. In turmeric, you had the futures rising on some fresh demand from the local traders, though the sluggish exports and higher carry-forward stocks limited the upside. The pepper futures also were trading strong on depleting stocks and thin supplies, though the expectation of higher production and sluggish exports capped too much of gains. The decline, though, has continued in soybean and soya oil prices, which shed over 1% today on U.S. Agriculture Department forecast of better than expected output. To understand the impact of the USDA report and also get an outlook on the prices, we are now joined by Nirav Desai from Nickel Inc. and he joins us on an Indore phone line. Nirav, hi, welcome. First of all, how are you reading the USDA report?
See, basically USDA came with a good surprise, or rather a bearish surprise for the market. Everybody was expecting Argentinian reduction, and Argentinian crop was reduced by 1 million tons, but people expected 2.5 million. Nobody expected a Brazilian upward revision of the crop. So that was the wild card, where the Brazilian crop was revised upward by 1 million, so that offsetted the Argentinian number. And overall, people were sitting at a bigger reduction in the Argentinian number. So I think Friday 10:30 India time, the report came, and I think market internationally and in India also still settling with that bearish surprise. And I think market has been factoring that since last 2-3 sessions. But maybe from tomorrow it might, I think, stabilize.
Nirav, also, what's your sense coming in for the Indian demand and prices now? I mean, more than 1% of a decline coming in for soybean. Going forward, what kind of a range would you be working with?
See, I think from here till April, the farmer selling is going to be less on the local soybeans, and somewhat nearby destination coverage from Vietnam and all these Southeast Asian countries might keep soybean prices reasonably supported. Maybe after the USD effects are over, maybe some small improvement in prices can come on the beans. But I think the soya oil, as we discussed in the last interview, also has been falling a lot. And I think the price gap between the CPO and the soya or refined oil will keep on pressurizing soybean oil forward coming in fourth time. Because the summer months are setting in. The winter, I think last cold wave might come in the next 1 week, and then we'll be setting in the summer months. So I think soybean oil may remain pressurized, but beans may stabilize in another 2-3 sessions.
Your point is well taken, Nirav. Thank you so much for joining us. That's the industry perspective coming in. Decline in soya oil, but consolidation for soybean. How would CPO look like, or trade? Sumit, how would you want to look at those ranges?
See, Manisha, crude palm oil has given a very stiff movement in past couple of days. We have seen that palm oil has been moving in a range of around 8 rupees. That means 445 on lower side to 454, 455 rupees on higher side. In very short term, we are expecting CPO prices to move up. So one can initiate long position in CPO at around 449 levels, with a stop loss to be placed at 445 rupees on lower side for the upside target of 454, and above that 459 rupees. This is a very short term call. For long term players, 430 is a very good stop loss. One can initiate long position at current market price with a stop loss to be placed at 430 for the upside targets of 470 and 490. Overall, we maintain a bullish view on CPO.
Vijay, how would you look at the sugar prices? Because quite a bit of a strong rebound coming in today.
Manisha, this is what I was counting on. As I said last week, any 2 to 2.5% decline in sugar will mean that there would be a technical bounce. And I was expecting a bounce from close to the 3,000 levels, and there you have it. The low made, I believe, on Friday was 2,980 odd levels. The sugar prices at this point in time are trading below their cost of production and transport costs. So these prices are unable to stay over a period of time, and come the summer months, I think prices are likely to head towards the 3200, 3250 odd levels. So I would expect a 6 to 8% upthrust from here, with the downsides being capped at maybe 3.5% from here. So the risk-reward ratio does point towards buying sugar futures.
It's been very choppy days for cardamom in the recent session. Sumit, how would you want to trade that one tomorrow?
Manisha, cardamom looks strong to me. We are expecting cardamom prices to move up and touch levels of around 1060 rupees. So one can initiate long position in cardamom at around 980 or 985 rupees, with a stop loss to be placed at 970 rupees on lower side, for the initial target of 1015. And if prices are able to break and give close above 1015, then further bullishness can be seen till 1060 rupees. Overall, we maintain our bullish view on cardamom for next 1 month.
Vijay, a question to you as well. How would you look at the chana prices? Because the decline there has been quite constant in the last many sessions now.
Manisha, what happened in sugar can possibly happen in chana, although I think chana is not yet completely out of the woods yet. I would still want to wait in the prompt month series, which is closed at 33.93. I would still want to wait for around 3250 to 3300 levels to take a look at the price, open interest and traded volumes correlation to see what happens. I think it's near oversold levels, and given another 2 to 3% decline from here, I would want to buy chana, because the kind of bounce back that you saw in sugar, chana's bounce back can be actually a little more vicious, because this is a commodity with a higher beta, and if it bounces from the sub 3300 levels, the possibility of something like 3550 to 3600 cannot be ruled out, but we would like to wait for lower levels and then take a fresh view.
Alright, so while it's uncertain non-agro space, the agro commodity is clearly giving you an opportunity to start buying into them. With that, thank you so much, Sumit, for taking time out for us.